You know what I say? I say sometimes transparency can kill, all right? In an effort to be outwardly thinking, the Fed has let us into their house and we can see everything, even their dirty laundry. I mean, we can see the rate hike map that they have up on the fridge. Well, it has an interesting, the interest rates are going to go up in the near term and the medium term. And they've been very open about their intentions to make this happen. But while this may be a noble idea in an effort to tame inflation, it can also be a pair of handcuffs that prevent you from pivoting from your original game plan. The market doesn't like uncertainty. It likes a plan and gets comfortable with it. But as the data changes, so should the plan. And unfortunately, the Fed is not that nimble with their stated projections. Interest rates, they're going to go higher. So much so that a soft landing has been ruled out by a lot of folks. Maybe even a hard landing has been ruled out too. With this transparent plan, some say we're on a course to kill the economy, plain and simple. My next guest knows a little bit about this. Please welcome to the show, Mike Lee. Thanks for coming on a Friday afternoon, Mike. Are we going to have to kill the economy to get a hold of inflation?
I think so. I mean, there's two ways of solving inflation: supply and demand. And a couple weeks ago, I drove by the port of LA, and I thought I was driving through the pyramids in Egypt with all the containers stacked high in pyramids as far as the eye can see. So I don't see any supply things changing anytime soon. And then from a demand standpoint, that's what the Fed comes in. They can raise interest rates, make it harder to buy a home, make it harder to borrow money, force over-levered companies into bankruptcy, which will spur layoffs, defaults to vendors, which will spur more bankruptcies and really slow the economy down. So I think we're heading to a recession. I don't think it's going to be a devastating recession like 2008. I would say something like the 2000 recession minus 9/11. But look, you got two options here. You can get inflation under control, or you could let society get ripped apart. And I choose a recession, which we can manage through and which is probably necessary. In the financial markets, I don't think we ever really felt the economic pain that we witnessed in COVID. The economy was clearly overstimulated. It's a little bit shocking that Janet Yellen and others can't say that we erred on the side of caution with too much stimulus, and now we need to pay the piper. They want to blame the supply chain or this or that. They've been wrong at almost every turn. So for them to say we're not going to have a recession, I don't know why they would be right now.
I totally agree with you. But it seems like they've just frozen out the idea of doing anything with supply, right? That's number one. And number two, it was only about 4 or 5 weeks ago, we had another guest on talking about unemployment and how that might be the last leg of, say, stagflation, right? And at the time, it was really not really thought about as something that was imminent. But, I mean, it's really come to a head pretty quickly, wouldn't you think? I mean, when Elon Musk says yesterday he's going to trim 10% of his workforce, that's a pretty big deal.
Yeah, you're seeing layoffs and hiring freezes across the board. The employment situation is pretty excellent right now. It is a very good time to look for a job. And I'd say when the Fed says soft landing, if they can tame inflation, so go from, call it 7-8% now back to 3%, 3.5%, something manageable. And unemployment only goes from 3.5 to 6 or 7%. To them, that is the soft landing. A hard landing would look something like 2008. And so obviously the financial markets have gotten, somewhat crushed, but it's all been orderly. So I think this is the Fed's soft landing. I don't know how long this contraction and recessionary period will last for. I don't know how deep it'll be. I tend to believe if it's pretty shallow, it might last a little bit longer. It's not going to be any sort of snapback. And I think obviously the prices of food and the prices of gasoline and diesel are going to continue to rise, further squeezing everyone, further slowing down the economy. With 30-year mortgage rate probably get up to 6% or north. What's that going to do to the housing market? You got to take out these excesses at some point.
I think, for as long as we've been talking, I think the big takeaway I take what you've said, which nobody else has said on my show, is that snapback that you just brought up again, right? Remember the snapback we had in the pandemic snapback? It was hellacious, right? The markets come back very, very hard, very, very quickly, and a lot of other scenarios. But this time you said you think that maybe we're not going to quite see that real rush, the face-ripping rally.
Well, look, I'd say when the Fed pivots, or when the market anticipates a Fed pivot, stocks will turn. Okay, are we 3%, 5% lower here? Or are we 20% lower when that happens? I think that'll determine how much we snap back. Also, what does the pivot look like? But it shows that the equity market has become very, very Fed dependent, since essentially 2009. So I don't know how much the Fed's going to be able to walk away from here. They ran $1 trillion balance sheet off in 2018, and I think they raised rates between 17 and 18, 6 or 7 times. We'll see where they're able to get with this, with the economy slowing down, the political pressure that they're going to face. But if this economy grinds to a halt and unemployment spikes and demand falls off a cliff, inflation is going to solve itself, which will allow them to come back in. And once they pivot, look out for stocks. So we don't know when that is. That could be later this year. That could be 3 years from now. So I own defensives. I'm long a lot of energy, consumer staples, utilities.
All right, man. That's great stuff, especially on a Friday. Give everybody something to think about going home for the weekend. Really appreciate you coming on. Mike Lee's coming to us from Florida. Thank you very much for all that great content, Mike. Have a great weekend.